The US dollar has crashed by 7% in just the last 4 months. We've seen such a sharp decline only 5 times in the past 15 years, and each of them had major consequences for Bitcoin's price. In each of these instances, so here in September 2010, April 2011, July 2017, August 2020, and December 2022, we saw the US dollar index fall by 7% in only 4 months. Each time, it coincided very closely with the beginning of a major rally on Bitcoin. So naturally, you'd expect a similar reaction from Bitcoin this time around, right? Instead, not only has Bitcoin not rallied this time, it has actually dropped by 30% during this period of dollar weakness. So does that mean the relationship between the dollar and Bitcoin is completely over, and Bitcoin is set to weaken further despite the weakness on the US dollar? You see, the US dollar index, also known as DXY, has had a strong inverse relationship with Bitcoin, meaning when the dollar falls, Bitcoin rallies. When the dollar strengthens, Bitcoin usually struggles. And this isn't just theory. We can see it clearly on this chart showing the price of DXY and Bitcoin. For example, in January 2017, March 2020, and October 2022, the dollar dropped sharply. Each time, Bitcoin went on a massive rally, and we saw the exact opposite in January 2018 and May 2021. Both times, the US dollar was strengthening, and that coincided with sharp declines for Bitcoin. The inverse relationship between the US dollar and Bitcoin exists because Bitcoin is often listed in US dollar pairs across most major exchanges. Let's look at a simple example. Assume that the US dollar and the euro are trading at parity, meaning that $1 can be traded for €1. If Bitcoin costs $100,000 when 1 US dollar equals 1 euro, then Bitcoin also costs 100,000 euros in Europe. Now imagine the US dollar weakens by 10% against the euro. This means the same $100,000 Bitcoin would now cost 90,000 euros in Europe. Europeans would see Bitcoin as being on sale, making them more likely to buy it. That can lead to a significant increase in capital flowing into Bitcoin from Europe. But this doesn't just happen in Europe. When the US dollar gets weaker, Bitcoin becomes cheaper for people in all other currencies too. And the opposite happens when the US dollar gets stronger. Using the earlier example, if the US dollar strengthens by 10% against the euro instead, then Bitcoin would cost 110,000 euros in Europe. This would make it more expensive for Europeans to buy Bitcoin, and they would instead want to sell their Bitcoin, since they can get more money for it. So when the dollar strengthens, the world is more likely to become a seller of Bitcoin. Now, as we mentioned at the start of this video, the dollar has just seen one of its most aggressive declines. Donald Trump has mentioned he wants a weaker US dollar many times before, and it seems he's getting what he wants, but instead of Bitcoin moving higher, it's pulled back significantly. In fact, Bitcoin has been moving in the same direction as the dollar since September of 2024. We can see that between September 2024 and January 2025, both assets moved up. Then, both topped and have been declining since. That's the exact opposite to what we've seen in the past. But that doesn't necessarily mean the inverse relationship between the two assets is completely over. If we rewind to 2016, when Donald Trump was elected for the first time as the President of America, we can see the US dollar also moved up quite aggressively. But this didn't stop Bitcoin from climbing higher as well. So both the dollar and Bitcoin actually went up together for 2 months, until January of 2017 when the dollar eventually topped out. This coincided with a 30% pullback on Bitcoin, similar to today, before Bitcoin went on a 2,500% melt-up. So the inverse correlation between DXY and Bitcoin can pause temporarily, but it doesn't break altogether. It tends to snap back into place once broader risk sentiment returns. So are we about to see something similar happen today, where Bitcoin sees a big move up as a result of the weak US dollar index? In order to answer that, we need to look at the US stock market. If we replace the chart of DXY with the S&P 500, we can see that there's quite a strong positive correlation between the two assets, both in good times, like 2016 and 2020, and also in tough times, like in 2018 and 2022. So just like the stock market, Bitcoin also trades like a risk asset. This is something we also highlighted in a recent crypto video. A better way to visualize this is by replacing the S&P 500 here with the stock market's breadth. This basically shows what percentage of S&P 500 stocks are trading above their 200-day moving average. When market breadth is strong, it means investor confidence is high, providing the right conditions for Bitcoin to move higher. That happens when this line crosses above 60%. And the exact opposite happens when this line falls below 60%, indicating weak market breadth. Now, if we put Bitcoin's chart on top, we can clearly see this pattern. Bitcoin tends to rise in these green boxes that show strong breadth and often struggles during these red boxes that mark weak breadth. We also saw this in 2016 after Trump was elected. Market breadth spiked from 20% to 80%, so from weak to strong, and then consistently remained above 60% until early 2018. That entire period coincided with this strong rally on Bitcoin. Now, since January 2025, following Trump's inauguration, market breadth has actually fallen from 80% to 25%. That's a major breakdown in the underlying strength of the market, and it also coincided with the recent 30% decline on Bitcoin. So in order for Bitcoin to recover, we'll likely also need to see market breadth get stronger. Now there's one indicator that is actually hinting at such a shift for market breadth, and that's the VIX. This index tracks how much volatility options traders are expecting from the stock market at any given point in time. In just the past month, the VIX has spiked from 17 to a high of 50, indicating a state of widespread panic in the market. If we draw a horizontal line at the 40 level and add the stock market breadth on top, we can see that every time the VIX crossed above this level, it occurred near turning points for breadth. In 2020 and 2011, it marked the weakest moment for market breadth before the breadth started to improve. And in 2010, there was a little more weakness in breadth following the VIX signal, but that was quickly reversed soon after. If a similar dynamic plays out again, then we should see the market breadth bottom and reverse relatively soon, and such a development would be very constructive for Bitcoin. So right now, we need two key forces to align for Bitcoin to bottom and move higher. First, the dollar has to stay weak. And second, the existing weakness in market breadth needs to turn around. When those two trigger at the same time, that's when Bitcoin tends to see some of its largest rallies. Now, we're not expecting Bitcoin to rocket straight up, even if the dollar remains weak and market breadth begins to recover. Institutional demand has changed the game. With more adoption comes more stability, and that means volatility is naturally bound to fall. As long as Bitcoin can hold above this $70,000 support zone, we believe price can gradually move higher from here, just like it has done throughout this bull run since 2023. Of course, a break below the support zone would be a short-term warning sign and make us turn more cautious. But for now, the setup remains constructive. By the way, we are doing an exclusive offer for you guys with our crypto exchange partner Blofin. Depending on how much you deposit and trade on their platform, you can get up to $2,500 of free bonus if you use our affiliate link down below. On this table, you'll see all the prizes that you can get for depositing and trading with their platform. A $20,000 deposit on Blofin will get you a $1,000 cash prize. Blofin, in our opinion, is one of the best platforms to trade crypto on, whether you have a small starting capital or millions to trade. It's available globally, offers over 495 futures pairs and 415 spot markets, and their customer support responds in just under 3 minutes on average, something we've tested firsthand. The platform is also extremely user-friendly, and trade executions are very rapid. So if you want a big sign-up bonus to start trading on a great platform, click the link below now.